There we go. Hey everyone, how you guys doing? Tired of being so dang hot. Really? Well, Texas, is it hot there? Buy an electric car. I live in a swamp. Yes, you do. 112 yesterday. Jesus Christ. Thanks, little G wagon. No worries, Jason. I don't know what it was, but I'm I'm not concerned. How's everyone doing today? The markets are closed in observance of Juneteenth. Happy fucking Juneteenth, everyone. What's up, Jen Jen? What's this week gonna be like, soothsayer? Well, we've got probably most of the gamma deleveraging already, right? Um, on ES, we've seen a fairly consistent slow crawl down with a decent amount of volume. So the charm is probably going to be mostly hedged off by tomorrow. I think more importantly, though, are the longer dated sold puts that are going to be now in the money. So we'll see. Nikkei didn't have a good day yesterday. Neither did DAX. HSI has been down. Shenzhen was down. China 50 was down. So yeah, the international markets haven't looked very good over the weekend. VIX futures moved up a little bit today. Um, Yields are skyrocketing for some reason. The It's not correct here on TV, but yeah, that I think the 30-year hit 4%. And then I know we've got more treasury issuances coming through the pipeline. I guess we'll see how much liquidity that peels off of on RRP. I know a lot of people are freaking out about that, but I mean, right now the total drop in on RRP isn't even equivalent to the amount of treasuries issued. It's about 1/4. So I mean, I don't think they're very willing to trade off the available liquidity of overnight repo operations for, you know, 8 to 52 weeks. Yeah, for sure, Rims and Tims. You still employed, dude? Yeah, we do have a short stream today. But the markets are closed. Why wouldn't my broker tell me about this? I bought calls on Friday. Am I the greatest fool? I won a trophy. I don't know. Did you buy them at the top on Friday? Why does everyone have to be so polarized with their positioning? Seriously, like I don't think I don't like I'm bearish as fuck, right? But I'm still buying calls, you know. Everyone needs to stop assigning so much, emotional weight to if they're long or short. I see that a lot. It's not just you, beef. But like I see that a lot. Like people are like, "All right, fuck it, I bought calls," and then it starts to go down, and they're like, "Why did I buy fucking calls?" And I mean, the best thing to do is still play what the market gives you, and if the market's giving you downside, lean into it. If it's giving you upside, take advantage of it, right? You can be long short, but that doesn't mean, you need to you need to pay for that in the short term. Or you could be, not long and still have short positions, right? It's just be flexible with it. Then they sell calls and it goes up. Woe is us. Yeah, yeah, that's excuse me. I'm still nursing a hell of a hangover right now. My boomer father-in-law says the news is still saying rate cuts are coming. It is. My GMECC's expired worthless. I love it when I don't have to buy back. Nice, man. Congratulations. Still employed, however, my weekly one-on-one with my director for the next 3 weeks got canceled. Canary in the coal mine? It might be. Are they still touring the new guy through your office? Long end pump is bonerific. You're talking about the yield curve, Dork? I knew you would be. Yeah, yeah. We're definitely seeing some increased yields on longer data. So for those of you guys that don't understand, yields going up on longer duration securities or longer maturities means that those are going to become more attractive than the shorter term maturities. And that is what can cause the yield curve to revert back to normal when those maturities start being bought up. But when those maturities start being bought up, you generally see huge outflows in equities. Blueberry Batman, welcome to Dillionaire. I thought you already were, but if you need me to add you again, let me know. I appreciate it, man. Is your PFP just a guy gently eating a blueberry? Is the future level right now similar to SPX around 4,400? If we slip 4,400 this week, likely we're gaining momentum. How would that affect the sold puts? Well, not positively, obviously. Sure is. Yeah. So the current level is, I believe, just at 4,400, maybe a little bit below 4,400 on SPX. And yeah, we could start to see some momentum. Remember that the 4,410 strike was only began being sold on Friday, a little bit on Thursday, but mostly Friday. So those levels aren't as entrenched as, like, 4,250 or 4,200, where you have, a buildup of sold puts from like the last 2 weeks, right? So it does give us a little bit of downside momentum, but obviously we'd like to see more. We'd want to see, that breakdown at 4,350, 4,300, 4,250. Those levels have far more sold puts than 4,400 and 4,410. Although, given the amount of time, the sold puts at 4,410 and 4,400 are pretty big. Right. The higher we go, the more they have to leverage to get it up. Is the future still in? Is the future level? No, they haven't, but that may be in the spirit of Juneteenth. Not a good look for the company today out of all days. Wait, are you off today? You work for a defense contractor, right? I feel like you'd be off today. The government doesn't pay bills on holidays. If those sold puts capitulate, won't that kind of gamma squeeze us down? It can start it, yeah. With the VIX as low as it is, does suppressed volatility pricing make puts cost same like shares? Makes volatility very cheap. Um, I've been going long VIX under 14 for about a week and a half now. I took some profitability off that position when we hit 15, but I've pretty much rolled all those profits back into a new position for after this week's VIX expiration, which I'll make note of tonight in Pickle's picks. Is that old JPM collar at 43.20? Yep. Gonna have a gravity pull on price the closer it gets, or do we know when that expiry is for when they'll try to push it back under it, or they don't care anymore? So that expires at the end of the quarter, which is gonna be June 30th. If we get close to it or start falling under it, they may sell off any hedge that they took on in order to protect the upside. So if we move above the collar, JPM is going to go long futures to protect the upside of their sold calls, right? But if we move back below the collar within the next week, then they're very likely to sell that hedge off. They're not going to continue to carry it if we're trading below their sold calls, right? I'm perfectly content to hit 43.50 this week. I would be very happy with that as well. I'd like more, though. QQQ fell on Friday hard at the 372 resistance. Looking to retest tomorrow? Or does back to 362 seem likely? And the next really important level is 367. So let's see. Nasdaq's down about 15 BPS right now. So that puts this around. Oh man, that's fucking. Hold on. I gotta zoom way in. So that puts QQQ around 367.76. Yeah, so it still hasn't quite failed that 367 mark. Right, and there's definitely like a little bit of old support here at yeah, 367. So we'd want to probably see Nasdaq break down a bit further than it has, under 1500 maybe for confirmation. And I think NQ's trading at 15,246 right now. Defense not off today. That sucks. When VIX sub 13. I mean, I hope never, honestly. But Jesus Christ. Yeah, it's very low. I mean, even historically, I don't see it persisting, right? The last time I went really super low like this was right before the COVID crash. And I went into that, 11, 12 range, but hopefully we start to see a bit of a turnaround in that. Especially with everything expiring this week. We'll see where the money goes too, right? All those in the money calls that expired yesterday, right? They're gonna cash settle out, and if that money is gonna go into, long maturity treasuries, right? And that's gonna cut down on the liquidity in the market pretty significantly, and maybe we'll finally start to see some implied volatility pick up. Seeing the VIX rise on rising prices is kind of telling. Holiday deferrals for OPEX. Well, not on SPX, right? Like, if anything, we'll see that shit get hedged off today before the market opens tomorrow, right? They're not gonna put on SPX, and that'd be an insane amount of risk to carry. I can't imagine. Like, I can see it happening on an individual equity, but I can't imagine that happening on SPX. Also, there's really no option to fail there, right? Yeah, because of the cash settlement. There's really no option to fail. So it's I think it's a moot point. Blue Fire, welcome back to Dillionaire, man. Or welcome to Dillionaire. Thank you so much, dude. I appreciate it. Hit me up on the Discord. I'll get you added after the stream, dude. I sent you an article on domestic steel prices that you can ignore. I will not. I'm going to read all of it. Any thoughts on GLD or nothing new? Thanks. Um, it's kind of still just stabilizing in the same levels, right? Dollar's been dropping, which is exciting, I think. I think if we get another set of rate increases, we're going to see more bank failures, and that's going to drive more gold speculation again, right? So I've been trying to buy this dip, as it were. I do have a risk level. I'll cut positions at 1930. But right now I'm just accumulating for like September and Jan, out of the money, like pretty far out of the money. TSN for a long-term hold. Okay, so when I look at those things on stream, generally not the best. Tyson seeing slumping revenues for 4 quarters now, but they've maintained their dividend. I guess they're just simply not benefiting from food inflation as much as they were through 2021. I mean, they're considered like a defensive, safe play for the most part, but there's a little bit of liability growth here. Cash flows. Ooh, cash flows have been really fucking bad. I'd look into this, find out the reason for this drawdown in cash flows. I assume they were paying off debt, but why did that stop? Like, what happened this last quarter? Find that out. Quarter over quarter growth isn't looking super good. Yeah, I mean, like, operating expenses are going up, the revenues are going down, cash flow took a hit. I think there's at least some valid reasons for the sell-off, so I would investigate that. And I can't tell you if it's a good buy here because I haven't investigated that, right? Is it historically cheap? Sure. But there may be a good reason for that, right? Expectations for GME this week? Not a lot. Give me 1 second. Let me pull up the tips here. The fuck? Oh. So, plenty of realized liquidity over the course of the run, and then a little bit more on this bounce here, like post earnings. I mean, I think GME is pretty liquid right now. I think they're in a good position to keep shorting it. If that shorting is met with a market downturn, the stock price is going to get eviscerated. So liquidity not an issue, right? Especially after yesterday's expiration. We'll see. I'd be patient the next 2 days. Because XRT just had a really big expiration. You'll want to see if there's any rollover from that. But after the next 2 days, I would say that yeah, it's in pretty deep shit if the markets move down. A lot of GME's price benefited through this period due to the fact that the market was rising, right? So they did their usual amount of shorting, but the market constantly rising. If I overlay, like, is that the same price scale? Hold on. There we go. Yeah, so if I overlay like SPX through this period, there's constant active fund pressure working against them, right? So, they probably would have been able to get the price much lower here had the market not turned around and ripped through this entire period. But if the market starts to come down and they're liquid, it's fucked, right? I mean, that's going to be more like, back here in December or following August, right? Where they had plenty of liquidity and the market was declining. So yeah, I would say that GME is not in a great position to keep moving up. The only thing that'll benefit it is if the market continues to rise. If it does, then lower target, right? I would say if the market continues to rip over the next several weeks, then GME no lower than like 20 to 19. If the market comes down, we'll probably see GME back at like $18 to $16 levels. And that, over the next month or so. Yeah, I'll take a look at Upstart. Upstart has benefited greatly from the fact that Nvidia has been ripping. Um, Remember that Upstart's only real source of liquidity is bots, and bots' largest holding is Nvidia by a long shot. So Nvidia ripping is putting a lot of liquidity pressure on bots and making it difficult for them to directly short Upstart. Upstart's a high enough price now that it could be added to other indexes. And then that'll unlock liquidity, but the float is still tiny. It's almost taking on like DDS levels of like difficulty for the short positions. So really profitable to short, but very difficult to find the liquidity to do so. And right now it's it hasn't crossed 40. I spent most of this week hedging the upside there. Liquidity on it's continued to contract. Hold on, I can pull that up too. So yeah, liquidity's continued to contract. We haven't liquidity hasn't hit the levels that it hit, like pre-earnings. So there's still quite a long way for them to go. I will say that you know bots has remained pretty illiquid, right? But like its second largest ETF, which is like IJR or IJH, has plenty of liquidity. So there's enough liquidity there if they want to short it, but they're not going to do it into Nasdaq rising. So similar position to GME, except way more volatile. And that's due to its reduced float size and reduced available ETF liquidity. Remember, GME has like 130,000 shares or 130 million shares in ETFs, and Upstart has like on a good day like a couple million. So getting liquidity to short Upstart is very difficult. Is it far more likely that this pump lasts until the next job reports, signaling a recession if up again? I mean, that makes sense to me. Um, yeah, on a macro scale, sure. Yeah, I could see them dragging this out longer until there's more impactful news. On a more micro scale, I think that we're due for some repositioning and a correction is not out of the question. It just may not be, like the one. And that's tricky. It's hard to tell. I mean, there's definitely the potential there. With all those short puts, there's a lot of potential there, but we don't know if it'll be realized yet. And they can turn it around on a dime with zero DTEs. Now, if their margin all gets blown up because the market drops too fast for them to claw back their sold short positions, that's kind of a different story. I took a heavy loss on a Tesla short over the last 2 weeks. Out of most of it now, but I'm looking to re-enter a 200 position with around 30 days of theta at a breakdown of 249. I think you're kind of far out of the money for 30 days of theta. I mean, I have like July 21 40 or 235 240 and 240 245 bear spreads that I'm pretty willing to sit on, and those are about 30 DTE, but those are also about at least $30 closer to the money than a $200 put. Don't get me wrong, Tesla can fall hard, but that's really far out of the money. And you're gonna be losing that huge amount of out of the money theta every day until it reaches that price target, right? With VIX being this low, would you enter long term near the money VIX calls or long dated far out of the money SPX puts? I think the SPX puts are a little better. Zero point 0.1 to zero point 0.2 delta, 120 to 150 DTE. I mean, I'd be more focused on their Vega value than their delta value, but Yeah, it can be more advantageous. They're less if you buy them at a VIX low. They're going to be less susceptible to like continued stagnation in the VIX, right? Their theta will remain more valuable for a longer period of time. So, I mean, I have a mix of both. I have at the money VIX calls and I have out of the money SPX puts in order to capture, continued increases in volatility or any increases in volatility at this point. But yeah, those contracts are Vega very, very Vega sensitive, and so increases in volatility benefit them quite a lot. Provided make sure your strike is liquid and you can find a buyer. I think that's the most important aspect of picking those kind of further dated SPX Vega positions. When next Upstart? I completely missed that dip before its crazy run. Um, really, it was in Pickle's picks. I was like, Upstart's cheap enough. Whatever. Um, hopefully again. I think it's facing enough headwinds that the short positions should still be encouraged to come back. We've got the dot plot moving up, projecting 2 to maybe even 3 more rate increases throughout the rest of the year. Obviously, that's going to destabilize the credit environment, and make the credit crunch only more inevitable. So, and none of that benefits Upstart in the short term. So yeah, I think there'll be opportunities there. I don't think the shorts are gonna give up just yet. Although above 40, it does get kind of frothy for them. Have you rolled down your SQQQ 25 calls or rolled them out? Thank you. I've rolled them out, but I haven't rolled them down. I have them out in well, they're in July and August. So I've rolled some of them out. Have we seen any large SPX put positions bought? I mean, there's puts coming in, but it's hard to tell what's bought and what's sold. I mean, obviously some of them are bought. I would say that near the money there's some interest, and out of the money there's some interest. There's put interest, like the longer dated put interest is mostly on the strikes where the sold puts are. So like 43.50, 4300, 42.50. The gamma on those positions at these prices is almost non-existent though. Have you chatted with some of your buddies on Wall Street as to what they think is going on with this crazy market? More specifically, wild VIX manipulation. I mean, generally, if I talk to anybody that works on that side of the business, they're not going to tell me shit, right? It's, it's they're not allowed to. So we usually don't talk shop. I can like broach the subject, but I'm going to get a very like useless answer. That's why, when people are always like, "Oh, look at my buddy that's texting me who works at such and such and like posting it on Wall Street bets." It's just bullshit, right? Because all of your communications are monitored when you work for a fund, and if you're going out and giving inside information to random people on Reddit, you're gonna lose your fucking job and probably your career as well. Not that it doesn't happen, but it's rare. Like DFV? Maybe. Although, can't prove it, right? Otherwise, they would have locked him up and thrown away the key. Because rich people lost money. Everybody knows that all the inside info is at dinners with fund managers. I got gun shy at Upstart after losing some money on it, but man, I could have just bought Leaps for 20x gains and called it a day. It's been a hell of a run. Better than even I expected. Um, I think a lot of it pinned on AI though. Obviously the AI thing came out of nowhere, and the valuations it's produced have been ridiculous and blown out of proportion. But I never thought about the effect of Nvidia on Upstart's sole source of liquidity, which has had a very meaningful impact on Upstart's price over the last like 3 weeks. There's a lot of other Discord and trading rooms that hopped on Upstart about a month after you mentioned it. Yeah, I know. Did you not run around Martha's Vineyard screaming "Win downs, win downs"? No. Um, but I can tell you that CMBS is a problem. Um, most of the people there were like bankers. And there was a lot of like commercial real estate talk. Um, and there's a lot of like debate about what to move money in for the next 5 years. There's the doomers and then there's the bulls, and they never agree with each other. But everyone seemed to be talking about CMBS. Nothing meaningful, right? Like nothing we don't know already, but just a lot of chatter about it, right? Which could mean something, could mean nothing. CMBS being a problem? No, you don't say. Are there more doomers than bulls? Always, always. Upstart has been really outperforming GME recently. Even with the options, profitability is pretty impressive. I miss the good old days when there was crazy IV on GME. Well, Upstart has a much smaller float. So when you're selling CCs or CSPs on it, the implied volatility is much higher. Girk, you know it. I know it. Everybody knows it. Commodities are about to do a thing, and inflation is big fucked. Yeah. I mean, there's a reason I've been full porting commodities since last year, right? They're cheap. Did you take a selfie in the khakis though? No, it was embarrassing. I even wore little boat shoes. They were calfskin, no socks. I felt like a prick. So I guess Upstart keeps bumping, but will suffer when equities move down and the credit market keeps getting worse as rates increase and stay higher. Yeah, I think that the short thesis on Upstart remains, and the shorts seem to be hanging on, at least for now, right? They keep having to reposition every time Nvidia bumps, but they keep repositioning. They haven't given up. So yeah, I would say as soon as they get an opportunity, they'll seize it. Hold on one second. Just got an alert for the 20 year. Ooh. Okay, let me double check that. Huh. Coupon 3.875%. Interesting. Hmm. Thoughts on natural gas? I've been a buyer around these levels. Could move up. I mean, we've already got a pretty hot summer. I think we've got like an El Nino weather pattern, so I think the implication there is that Europe's going to see a much harder winter this year, and we could see natural gas prices rise into the latter half of the year. I don't think it's a bad bet. I'm just wondering if it's too early to get in. Quite a lot of time cost there. What part of MV did you stay in? Oak Bluffs. What is it? Was it the ECB speaking today that spiked yields? I mean, it could have been. Their track, I mean, the ECB's track looks like kind of like the Fed's track into late 2021, right? They're continuing to face rising inflation, and they're going to have to do more to address it. So I think ECB is very much on the higher for longer plan, and yeah, that's obviously going to have some effect, right? Fubo, Fubo's a little more interesting. Fubo might. There's some ETF FTDs coming up into the end of this week and next week. That may have some impacts from its current price. I've been selling like 250 cover calls without much concern, and some at $2. I know it. I know it took a little bit of a hit Friday, but not a lot, and liquidity on it's kind of tight. I'm not gonna pull it up right now, but I'll post it in like the Fubo channel later. Liquidity's a little Fubo. You know, if the market has like a more positive leaning OPEX, then you know Fubo could be a beneficiary of that. If the ECB is hiking aggressively, whatever could JPOW do to keep Dixie above 100? I mean, they'd have to do something. Maybe even forced to do something sooner than expected, right? Also, you need to lay off the conspiracy pipe. You've been fucking smoking it hard lately. It's not conspiracy if it's true. Fair. But it's conspiracy without evidence. Heading into a one-to-one with one of my staff, I've been ghosting this guy for weeks because we're replacing him. Wait, what? Sarcasm? I'm I'm confused. Be right back. I need to go meet with my boss. The dude hasn't answered me in weeks. Oh, that kind of ghosting. Okay, I get it now. Good luck, both of you. Say what now? Which defense contractor do you work for, sir? I don't know what you're talking about. My boss is Chinese and is sleeping right now. AI will replace all the jobs. AI will save the markets. See, the idea that blows my mind. Like, do people really think that like corporations are going to replace all their employees with AI and somehow that's going to be good for the economy? That's not even going to be good for the markets, right? You're talking about unemployment increasing like tenfold. Thankfully, AI in its current iteration is about as useless as a bag of dicks. But God forbid it was actually able to replace real people at actual jobs. I can't wait to go through a Wendy's drive-through and order something, and the AI makes something that doesn't exist on the menu, and goes, "No, this is totally a Wendy's cheeseburger." It's gonna be like a piece of lettuce knitted to a tomato on a bun made out of meat, just like AI artwork. The only people that think that are the people being replaced. It's fine. AI will only replace lawyers and call centers. Amen. Right now, it's making up cases to cite, so I don't think that's going to be an issue anytime soon. Serious question before I head off to a meeting. This pump of late, is it more insane than the pump before the 2020 dump? It's roughly equivalent. I mean, the market went up about 20% before 2020. Um, from like end of October through mid Feb. So it was crazy, but they didn't have zero DTs, so it wasn't as crazy. Like you didn't have the big gamma squeeze up that we've been getting lately. And this shit's been almost parabolic at this point. I used ChatGPT in my court case a few weeks ago. It did not go well. Maybe AI will fix McDonald's soft serve machines. It's possible. You know, there's a website for that where they tell you when they're operational. You know, the machines aren't broken. The employees just don't want to fucking make you an ice cream at 2 in the morning. Which, ironically, is the time most adults want an ice cream cone. Do you think oil will squeeze? I mean, I don't think it's going to squeeze, but I think it's very likely to move up into the rest of summer. We've got OPEC cuts coming in at the beginning of July. We're only about 2 weeks out from that. Um, the Fed's, the government's holding up the bottom with the strategic oil reserve purchases at like sub 70 a barrel, right? We've got continuing decline in production from Russia. Um, and then summer demand. So yeah, I think oil prices are going to move up. I don't think they're going to squeeze. Thanks for the stream. Everyone enjoy your Juneteenth. You too, man. Later, Chims. Speaking on AI, you think there's anything to the SoFi downgrade? Some analysts say it came up too fast. What the hell? Is it more about student loan repayment concerns, maybe? Yeah, I think there isn't really a firm decision on student loan forgiveness yet, at least not from the Supreme Court, as far as I know. I think that's probably going to be the tipping point for SoFi, but speculation got a little wild there. I mean, the company, like the bank, still has other issues, but they've been doing moderately well, and student loan repayment being forced and starting soon both benefit them quite a lot. R2K announced it this Friday, correct? Should be, yeah. Since we haven't seen it thus far, yeah. I think that's the final deadline. If GME is in, the reshuffling should give liquidity to push price down. Well, they already have liquidity, but August, September FTDs could be nice potentially. I think the benefit of moving to RTK is more active fund pressure, right? Over time, the more active fund pressure, more options interest, higher liquidity is going to drive more interest and could bring back the volatility of, you know, prior periods. Not to the same extent, obviously, since GME split, but much, much better. Are you excited for downside? Yeah. Yeah, yeah. I would like to see the market move back to gamma neutral. I'm not asking for a lot. Give me gamma neutral and I'm in a very good position. And then I can reposition for further downs if they want to keep up this pumping bullshit a while longer. I think it could be beneficial to calculate the correlation coefficient of underlying stocks of the S&P and use the highest correlated movements to use as a leading indicator for the total indices. Hmm. Probably. It's not going to be leading. I think the problem there is, yeah, it's not going to be leading. Why not just calculate net liquidity? Yeah, I mean, you could just use licks for that, right? What's gamma neutral at again? I didn't check it today yet. Hold on. Give me a second, I'll tell you. Gamma neutral on SPX is at 42.44, and delta neutral has moved up massively to 42.64. So, yeah. Still holding on to these 200 Jan 24 NVIDIA puts. Already down 80%. I'm kind of willing to wait it out and see what happens. Well, they'll miss on earnings at some point, right? Let's see how much longer they can lie about earnings that have yet to occur. Problem is that futures and zero DTEs are wagging the dog, and there's no leading indicator other than JPOW's tie color. Yeah. I mean, there's a big problem with the zero DTEs being extremely unpredictable. Um, Trying to get better at predicting them, but they're still. I mean, they come in so fast, and they drastically change not only the trading range, but they can change direction. They have a extreme impact. For the SPXs, the greenbacks have the same bottom. I haven't done that yet. I'll post that tonight, but the one I have right now is not updated. But no, it won't be. Any good tinfoil theories being thrown about? No, not too many theories today. I mean, we're kind of discussing how much of the charm is going to be hedged off today versus seeing more action from it tomorrow. I'm more interested in what happens now that all the in the money calls have been cash settled out, because a shitload of those expired on Friday alongside the charm. And where that money goes, especially with maturities, yields on longer maturities picking up today. Any data this week? I mean, yeah, I'll write. I'm gonna do a write up tonight. I'll have Pickles picks out probably around midnight or so. Oh, you're not going to be able to get a good grasp of net liquidity just off of the Fed, TGA, and on RRP. Especially not if you're trying to code it in TradingView, which has logging data on all of those. All of those data points are lagging, so there's massively. TGA is always 2 days behind, so yeah, that would be useless. Spreads are a decent metric because those can be tracked in real time. All right, well, I guess that's it for today. Does anybody else have any other questions before we wrap this up? This upcoming possible correction we keep talking about will be suddenly in one day, or will we be able to chase it? I mean, you could always chase it, right? There's a huge fear of watching this channel for 2 years and missing out. I haven't been bearish for 2 years. Jesus Christ. Is the Fed's website lagging? Fred? Yeah. Most of the Fred data points are like a week or a quarter behind. SLQT sounds like garbage. Oh, look, it is. Okay, so they made money recently. That seemed to be like a big deal. Multi-line insurance. Insiders buy shares. Cash flows move positive, but I don't know if that's going to be sustainable. Trading a bit under book value. Awful lot of fucking liabilities with no money coming in. Hmm. They're building up a little bit of a moat. I'd look into their liabilities. Current liabilities are not very high, but for the non-current liabilities, deferred tax liability. Hmm. Find out when their non-current liabilities are coming due. Like, find out the maturation date on this stuff, because if you're gonna go long on it, that's gonna be pretty important, I think. You know, for a penny stock, it's not terrible, but I'd want to know the reason for this last quarter being so much better than the prior 8. So I'd have to dig a bit deeper. Mm. It does look like accumulation from the technical side. Why does Carvana keep going up here? Oh, they promised to like absolutely kill it this quarter, which I think is just going to mean they're going to issue more shares. It's getting pretty close to its upside resistance here. Probably around like 28 where it's been trading. Volume starting to fall off, so interest is dying down a little bit. Their earnings are a little bit better than expected. Um, but their revenues are still garbage, and they've got a shitload of inventory that they can't offload. Inventory that's depreciating in value rapidly. So I'd be careful if you're thinking about going long on it. If you're thinking about shorting it, I mean, it had a big short position on it, so make sure that most of that's squeezed off at least before trying to. 342 watching, 134 likes. Suspicious? It doesn't seem that suspicious. Do you think $35 Jan 2025 is too far out of the money? For what? What's your timeline on the correction? Well, I mean, like I said, I think we can see some downside this week. I don't know how much momentum that's going to pick up. The biggest problem with seeing downside right now is that we're kind of moving into a couple weeks that are generally light on macroeconomic data. We do have a few things coming in each day, but nothing major, right? Which pushes any catalyzing event further out. And besides the treasury or unforeseen political things. So I don't know. I kind of want to see how far this takes us. If you know if we correct right now really hard, that could push the timeline for a bigger correction out further. I think this week's going to be pretty important on the technical side because you know there's a big breakdown in positioning and that's going to have to reposition. That could see volatility move up. That's going to put pressure on short puts. Their short puts may be already opening underwater, right? And so there's a lot of potential this week for us to move based on the positioning in the market, not just the macro environment, right? But we don't have a true catalyst, so that makes me worried that they'll try to pump it back up again once we get back into that net negative gamma territory where it's so beneficial to do so. I can probably get you their gen port durations when I get home. Oh, okay, cool, yeah. Check it out. It looks interesting just because it's so fucking cheap. Yeah, no problem, Sovereign Giant. All right, guys. Well, thanks for tuning in. I'll wrap this one up so everyone can get back to enjoying their holiday. So right now it looks like futures are pretty much down across the board. Only thing that seems to be performing well right now is wheat. Dixie's up a little bit, recovering somewhat from last week. Euro and pound down. Dollar against the yen up. Bitcoin up, and then yields up, but specifically on longer maturities. So the 5 to 30 year are rising at a much faster clip than the short dated maturities. Yep, Pickles Picks will be out tonight at midnight. If I missed purchasing of a straddle last Friday before close on SPX, does it make sense to buy when it open, or just play the daily move and buy at the end of the day? It's probably best to just play the daily move because whatever overnight movement happens is going to be done by the time the market opens, right? So yeah, it's probably better not to try to chase it. All right, guys, enjoy the rest of your Juneteenth. Thank you all so much for tuning in, and I'll see you bright and early tomorrow morning at 9 a.m. Have a good one, everybody. Later.